From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 22nd, 2017. In a moment, we'll be taking a look at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. But first, a real quick recap of yesterday's trade suggestion. Looking here on the AUD USD Australian versus the US dollar, we were studying the resistance zone at the very top of the chart. And I've made it easy to see because there's all these circles along that green shaded area at the very top of the chart between 77.20 and 77.45. We were looking at that as a key resistance, a key reversal point for the past year for the Australian dollar. So as it challenged and tested into there and into the green zone towards the top of it, we went ahead and took a short into that resistance zone. Fairly low risk, higher reward. Now we're sitting with 75 pips of profit on the trade. I have closed some of the profit, about 3 of the 5 lots we started with in the trade room, and have locked in with the stop loss. We can't lose. We've closed profit, locked in stop loss. It's a winning trade all the way around. Let's see how far we can take it. If we can get it to break down through the 76.40 or so level, right in there in the mid 7600s, I think we're easily looking for it back to 7600, which is the purple shaded area here. 7600, 75.85. We'll look for it back there if we can get it through breakthrough 76.40 today for the Australian dollar. Next, moving over to the USDCHF. So here on this currency pair, there's a couple of trends we've been studying here. In fact, I'm going to take the blue trend line off because we don't need that one anymore. We're looking at the black trend line and the red trend line. First off was a downtrend along the black trend line much of the beginning of the year, from September through January. Then February, we started a little rise along the red trend line. And now through March, we've been in a little bit of a fall. So basically every month this year so far has had a little bit of a different trend here for the dollar franc. In the current moment, we're in a little bit of a fall phase. So if that continues, we'd like to look for opportunities to go short, selling resistance or breaking through support. Take a look at the blue zone between 99.50 and 99.65. Right in the middle of the chart. Again, I've made it kind of easy for you to figure out where that is because of the black circles on the left. You see resistance, resistance, and resistance. So history tells us, just looking to the left where the black circles are, that as long as it's underneath that blue shaded area, that is resistance. Well, guess where we are today? Let's go ahead and zoom it in a little bit. We are underneath that blue shaded area, 99.50, 99.65. Even going back just where the black trend line is, you can see a couple of areas of congestion, the blue box and the black box. Well, interesting enough is we are in the zone where the black box is. Guess where? Between the blue and the orange shaded area. So history again has told us that as long as it's under the blue zone, there's potential support at the orange shaded area. So that's what we're going to work with today until the market tells us something different. That's what we're going to work with. Let's go ahead and look for short opportunities and selling opportunities. Let me change the properties of this arrow to make it easier to see. Let's make it black, a little bit thicker. There you go. That makes it easier to see. So underneath that blue zone is what we're looking for resistance underneath 99.50 and targeting back down to the orange shaded area. So when do we enter it? Do we want to enter it now or do we want to enter it later? Let's take it down to the 4-hour time frame. Well, as I say in the trade room all the time, the best opportunities, the lowest risk and highest reward opportunities to sell anything are into resistance because it provides lower risk and higher reward. I would say, at least at this point, you're considering a resistance all the way up here. And let me change the properties of this trend line, make it easier to see for us here. I'm going to make it, we'll leave it red, and I'm going to make it a little bit shorter there. There we go. So your stop loss would be above the blue zone, of course. And I would say even above these last little area of congestion right here, this area where it found resistance right around the 99.80 or so level. So putting it 99.85 or so would give you, or even 90, would give you a decent stop loss for a short trade. The risk here is that it breaks above the blue zone. So if it breaks the blue zone, we probably don't want to stay in it too long. Couple of fibs. Let's draw a couple of fibs here on the chart. Let's go from the highest high down to the current low. That puts the 236 at 99.72. Now that's a long fib, and of course if it makes a new low, that Fibonacci would change. Let's take a little bit shorter. Let's just take that same range and draw it to this high. Well, that's interesting because the 382, 50%, 618 sit right around this blue shaded area. So as it rallies and holds resistance here, right around the 99.50 level, I believe that this will be an opportunity on an intraday to go short with a stop loss 35 or so pips there where the red line is, and we'll target the orange shaded area. Now, if it breaks the blue zone, opens and closes back above it, that's going to invalidate the trade, and we're possibly looking for it to go back up from there. So the key point is that we want to see it stay under the blue zone, target the orange zone. A break above the blue zone is the risk on our trade today for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.